Price action is one of the most popular concepts in trading, but the truth is most traders read price action on one time frame. They're looking for areas of support, resistance, breaks of structure, areas to take trades. This is reading price action completely wrong because it's not in context. So when you think you're entering a long or short, you're really just flipping a coin. In order to read price action effectively, you need to combine it with higher time frame candle closures, because that's what tells you what phase of price we're actually in. So I'm going to show you an example of how to get into high probability trades like this 2R that played out perfectly on GBPCHF. Let's get into it. So we are looking here at 12-hour price action. Why 12-hour price action? Because we're swing trading. But remember, price is completely fractal. So this applies to the lower time frames. This is about working through the example. So let's just assume we're swing trading 12-hour price action and we want to swing trade in line with higher time frame candle closures. So this would be the weekly, the 2-weekly, the monthly. So instead of trying to understand what's going on here in isolation, I'm going to overlay a higher time frame candle. And suddenly this gives me an area or edge of confidence that I previously didn't have. So what is going on? Well, you see price is bullish. On the 12-hour time frame, we have a bullish structure. Price is retracing into lows and breaking up. But how do you actually trade this and what makes sense? Well, why is price bullish? It has shifted bullish because we have a 2-week candle closure. Why is price shifting bullish? It is shifting bullish to run the high of the previous candle. So price instantly draws to the high of this candle. What happens next is crucial. Price then prints another 2-week candle, which has manipulated the previous candle range. So this is the high of the previous candle range. Price has run into and liquidated the high. It's raided the external range liquidity at the high of this candle. Then it closed inside. This means that price has manipulated its previous candle. Price moves in 3 phases: accumulation, manipulation. The third phase of price is distribution, and we distribute to where? The low of the candle that has been manipulated. That's how markets move. So as soon as this candle closes, this is our draw on liquidity. And it makes sense because we're coming into an order block at this stage. So price has retraced, closed inside. Price is now going to open and then draw immediately and aggressively to the distribution target, which is the low of the accumulation candle. So how do we actually trade this? So on one hand, we have 12-hour price action. And what does price action tell us? It gives us triggers to get into trades. So if we look at what actually exists here, we have bearish price action. Price sold off. So we can see right here, we have the last buy before the sell. So we can mark that as our high probability order block. Price is going to come into the order block and dump. What it also aligns with is a bearish fair value gap. So right here, and I'll mark this in red, we get the formation of a fair value gap, an inefficiency between candle 1 and candle 3. So as soon as this candle opens, its target here is the low, but it first needs to collect the liquidity that exists in our 12-hour structure, our 12-hour price action. So price prints bull and actually is starting to try and entice longs into the market. So new traders are looking to enter long here, but all price is doing is mitigating this internal range liquidity. What then happens? It flips bearish again. So we get a new buy to sell. This becomes our next 12-hour order block. So we have buy to sell, buy to sell. At this point here, we have everything we need to take an entry because we have a target, which is there at the low of the accumulation candle, and we have internal range liquidity on our price action, our 12-hour price action, to take the trade. We can probably just reduce this stop because price has already ran into the fair value gap, so there's no reason for price to retrace that far. where do we target? The actual low. And that turns into a very clean 2R trade. The alternative entry is that you either wait for a mitigation of the fair value gap, or you just take the order block and maybe cover the last liquidation, so the order block high, for example. This instead is a 2.6R trade. And look how timeframes actually align. So we're looking at 12-hour price action, but how is this printing on the daily? So if you look at the daily time frame and we just take away what we've marked on the 12-hour price action, and I bring back the 2-week candle, price is fractal. It just mitigates liquidity levels on different time frames in the same structural way. So if you didn't want to actually look at any of the 12-hour noise and you just wanted to see how is this going to open and where is the liquidity that I can use the price action to take the trade, it's very simple. We have a bearish order block, the last buy to sell. As soon as this candle closes, it confirms the daily order block, which is sitting right there, buy to sell. Price mitigates it and mitigates it again. We know that this wick was to mitigate the 12-hour fair value gap that sits right here. But if you didn't even want to look at that noise, you just enter, cover the order block high, and just drop down to the target, and you've got around a 2R swing trade, which plays out very easily. The crucial part here is that we're aligning our execution time frame, whether that's 6-hour, 12-hour, daily, with higher time frame AMD, because that is how markets move. Let me show you another example on silver. So again, we're looking at 12-hour price action. And what are we looking at here? We could say this is a break of structure. We could see that, I don't know, price has retraced. We've broken structure again, but then it just dumps. Price action in isolation gives us very little. As soon as I overlay higher time frame candles, I can start to get an effective read of what I think price is going to do. And what do we see here? We see price at this point is in a downtrend. Where is it actually in a downtrend towards? The low of the previous candle range. As soon as this candle prints, we have our manipulation. But this is where time and price start to align. As soon as we are seeing this downtrend, our price action is bearish. But what happens right here? We have the formation of a bearish order block, buy to sell. Price then retraces into the order block, but it doesn't sell off. It explodes bullish and prints aggressive candles inside the order block. What we also then form is a new bullish order block. It sits right here. So this is the last sell to buy. What do we also get here? A fair value gap. So this is something I talk about explicitly on my free courses on YouTube, is order flow shifts. So this is showing you that 12-hour order flow, 12-hour price action is now bullish. As soon as this candle prints, we have a bullish order block and a bullish fair value gap. Look at how far into the 2-week candle we are. If price is going to shift bullish here, it's a very high probability that this candle will liquidate the previous candle. And as soon as this candle closes, we have a higher time frame target for price, because markets move in accumulation, manipulation, and distribution. So this is a front run, super clean entry from the fair value gap, covering the swing point here. You can either cover the swing point or the actual liquidation of the order block. We have so much room, we can just give ourselves space. 4.6R trade, which gains in confluence as soon as this candle closes. If you don't get that entry, you're waiting for this candle to close. This then confirms the actual manipulation. Price then, what does it do? Creates new structure to potentially trade from. So we see here, we get bullish structure. Price does not hit target. It mitigates what? The fair value gap. So we've created a new bullish price leg. We have buy pressure, sell pressure, buy pressure. here's the new swing point at the low of the order block. What do we then have? We have a bullish fair value gap that's sitting right there. So when price is selling off, that's enticing shorts into the market. But the price action is only doing one thing. It's seeking the liquidity at the fair value gap. So again, you can cover either the order block or maybe this specific candle. I talk further about actual stop loss placement again on the YouTube playlist. And there's our target. That's a 1.34R trade. So again, this is not necessarily the best trade to take, but it shows you how price action aligns with higher time frame AMD. And then guess what? What happens? We see price run the previous candle here and close inside. Order block, fair value gap, price just drips away, but you see the process happening again. Accumulation, manipulation, close inside, distribution. Once you start to be able to combine price action with the right higher time frame candles, so when we're looking at 12-hour price action, this would be weekly, 2 weekly, monthly candles, and also the alignment between those candles, you can become an absolute master at trading. So you have everything you need to combine price action with the way that markets move through cycles. And that's exactly what I teach on my 30 video series on candle range theory and AMD. It's on my channel for free and it exists in 3 parts. Go over and check it out, and I'll see you on the